Hey everyone, welcome back to Corporate Decoder, the place where we take a look behind the curtain of big business deals. And let me tell you, the deal we're unwrapping today has more twists and turns than a pretzel factory. This report is all about the upcoming merger between Mesa Air Group and Republic Airways Holdings, both regional airlines looking to join forces. We're diving deep into the financials, the risks, and what this massive deal could mean for their future. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we break down these filings even further. Let's get right into it. The big news is a merger between Mesa Air Group and Republic Airways Holdings. Think of it as two regional airlines deciding to become one super regional airline. The deal is structured as a merger with Mesa surviving, but is being renamed Republic Airways Holdings and is expected to trade on Nasdaq under RJET. This isn't just a simple merger though, there are a lot of moving parts, including a significant amount of debt and complex agreements with United Airlines. This filing is dated September 12, 2025, and it's an amendment to their Form S4 registration statement. This means they're still working to get everything finalized. Mesa Air Group is the registrant here. It's a Nevada company that flies regional jets under the United Express brand. Right now, their finances are heavily tied to this one major partner. The core of this deal is the agreement plan of conversion and plan of merger. It lays out how Republic will merge into Mesa, making Mesa the surviving company. But the surviving company will take on the Republic Airways Holdings name and ticker symbol RJET. Before this merger, Mesa's Nevada registration is converting to a Delaware one, essentially a corporate address change. Looking for the benefits that Delaware law offers companies. This message is loud and clear to Mesa stockholders. They need your vote to move forward with this deal. There are several proposals on the table. This is the big one, approving the merger and the move to Delaware. It's crucial for the deal to go through. This one's about issuing a lot of new shares, which could dilute existing stock value. And it also involves a change of control that needs Nasdaq's okay and your approval. This is the golden parachute vote, where stockholders get to weigh in on executive compensation tied to the merger. It's non-binding but sends a message. This is about approving a new equity incentive plan for the combined company's future employees and executives. This is a fallback in case they need more time to get the votes needed for the other proposals to pass. Let's talk numbers. The report highlights that pre-merger Mesa shareholders are expected to own about 6% of the surviving company, but after some complicated adjustments related to debt and escrow arrangements, this could go up to about 12%. Former Republic shareholders are expected to own a whopping 88%. Looking at Mesa's financials for the 3 months ended June 30, 2025. Total operating revenue was $92.7 million. That's a significant drop from the same period last year, down 16.3%. Contract revenue took a big hit, dropping by over $25 million, which is a direct consequence of having fewer aircraft under contract potentially, because United Airlines is scaling back some operations. On the expense side, things also dropped, but not as much. Operating expenses were $92.9 million, a 22.4% decrease. Flight operations and depreciation saw significant drops, likely due to fewer aircraft and ongoing asset sales. Asset impairment took a huge positive turn, actually showing a gain of $79 million compared to a loss in the previous year. The bottom line for Mesa in that 3-month period was a net income of $20.8 million, a massive turnaround from a net loss of nearly $20 million in the same period last year. This swing seems largely driven by financial engineering, like the write-off of warrant liabilities and lower interest expenses rather than substantial operational improvements. Now let's peek at Republic's side. Their revenues for the 6 months ended June 30, 2025 were $800.4 million, up a healthy 12.4% from the previous year. But here's the catch: wages and benefits jumped by $36 million, a 11.1% increase. This shows the pressure on labor costs in the airline industry. Republic's adjusted EBITDA for this 6-month period was $168.8 million, a solid increase of 30.7%. This means they're generating more cash from their core operations before accounting for certain expenses like rent and interest, which looks good on the surface. Their net income was $64.5 million, a significant jump from $27.6 million in the same period last year. So parts of Republic's business look strong. But here's where things get dicey. This whole deal hinges on a massive three-party agreement involving United Airlines. Mesa has to sell a lot of assets, including aircraft engines and old CRJ planes, possibly losing money on these sales, to pay down debt. United is essentially backstopping this by agreeing to forgive or take on Mesa's remaining debt. If Mesa can't sell these assets as planned, United might have to step in, and that could get complicated. Then there's the escrow. 6% of the new company's stock is being held in escrow. This pot of money or stock will first go to satisfy any remaining debt after asset sales that Mesa couldn't cover. If there's anything left, it might go to the surviving company or even back to Mesa's original shareholders. The exact outcome for Mesa's shareholders is completely up in the air and depends crucially on how much debt is left after all the asset sales. This merger is also a reverse acquisition, meaning Republic is technically buying Mesa. But the structure suggests Republic stockholders will own the vast majority of the new company. The report is full of risks. We're talking about potential litigation over the deal. Nasdaq listing requirements are a big hurdle, and they might need a reverse stock split to even get listed, which is never a great sign. The market price of Mesa's stock has been volatile. There are also significant risks related to pilots and mechanics shortages affecting both airlines. And let's not forget the ongoing regulatory landscape in the airline industry, which is always changing and costly to navigate. So what's the verdict? This deal is complex. It seems like a necessary move for Mesa given its precarious financial situation and reliance on United. Republic is looking to gain scale and access to public markets. But the reliance on asset sales to clear debt and the huge chunk of stock in escrow create considerable uncertainty. It's a high-stakes gamble, definitely one to watch very closely if you're invested in either company.
Alright, that's our deep dive into Accession. For more insights. Thanks for watching. See you next time.
Let me know in the comments below. Cap tap and cap tap cap tap cap tap 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 cap tap cap tap cap tap cap tap 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 cap tap cap tap 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 cap tap 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 cap tap 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 Cap is possible that the document you scraped for me is not the right one. Perhaps you could provide the correct document.